This is Fintech Insider News. This week, Wise to refile US bank charter application after OCC rejection, Western Union winds down its digital bank service, and eBanks and Pagalev blend PIX and BNPL to expand access to installment plans in Brazil. We'll be tackling all of this and more on today's news show, so don't go anywhere.
This episode is brought to you by Netflix. The MLB at Field of Dreams returns. Bryce Harper and the Philadelphia Phillies face Byron Buxton and the Minnesota Twins at the iconic Field of Dreams ballpark. The field is calling. Watch the MLB at Field of Dreams game live on Netflix Thursday, August 13th at 7:30 p.m. Eastern, 4:30 p.m. Pacific.
Hello and welcome to episode 1086 of Fintech Insider News, brought to you by 11FS, the six-time consultancy of the year that works with financial providers big and small to build the next generation of financial services. I'm Kate Moody, Customer Strategy Director here at 11FS, and I'm joined to unpack some of the biggest and most interesting stories from fintech and financial services from the past week by a brilliant panel of guests. First up, we have a welcome to the podcast for Matthew Goldman, founder and managing member at Totavi. Hello, Matthew. First and foremost, massive apologies if I mispronounced that, but would you mind introducing yourself and tell us a little bit more about you and what you do, please?
Yeah, pleasure to be back. Totavi is a consultancy in the United States, and we help fintechs and established companies to build and manage card programs primarily. And I've been in payments my whole career, over 20 years doing debit, credit, and everything in between.
Awesome. Well, yeah, looking forward to picking your brains. So thanks very much for joining us. We also are welcoming to the show Neira Jones, advisor, keynote speaker, and author. Welcome to the podcast. Again, how are you doing? Would you mind introducing yourself to our listeners, please?
Absolutely. I'm Neira Jones. I'm an independent advisor. I've been in payments and banking and financial services for a very, very long time. I won't tell you how many years because I'll show my age. Suffice to say, I remember COBOL. So anyway, I'm there. I'm a self-confessed payments nerd. I'm also an author. I've written 3 books about payments. That's how nerdy I am. I won't bore people with my bio. I'm an advisor. I'm an expert witness and an international speaker. My LinkedIn profile is up to date, and I'm always delighted to make new connections.
Well, this is absolutely a home for fintech and financial services nerds, so you are exceptionally welcome. Thank you for joining us. And last but not least, we also will have a welcome back to the show for Bruno Diniz, managing partner at Spiralem. Again, Bruno, always great to have you on the show. How are you doing? And would you mind reintroducing yourself and Spiralem to our audience, please?
Definitely, Kate. So great to be back. So I wear some different hats. One of them is Spiralem, which is my consulting firm, basically helping corporates and also regulators and other institutions to innovate in finance and abroad and locally here in the country in Brazil, where I'm based. Besides that, I'm also a teacher at University of São Paulo at the MBA courses. I was appointed in 25 independent advisor at Open Finance in Brazil, and I'm currently chairman of Open Finance Brazil, and I also know author of books. So I have 3 books on fintech, and another one co-authored with Brett King and some other folks about branches and bank branches and how all the downfall of bank branches that we had recently. So that's a little short for what I do, and great to be back again here.
Amazing. Well, yeah, what an awesome panel of guests. I'm so excited to hear all of your takes on the news. So let's get into it. Our first story is taken from the papers, but covered in quite a few places, and that is Wise to refile US bank charter application after OCC rejection. Wise is preparing to refile its application for a US national trust bank charter after its original bid was rejected by the Office of the Comptroller of the Currency, or OCC, last week. The company says the decision reflects changes in the regulatory landscape over the past year, including new Federal Reserve policies on payment system access and the introduction of the Genius Act, rather than any impact on its existing US business. Wise says it has strengthened its US compliance framework following a 2025 consent order and plans to submit a revised application designed to align with today's regulatory environment. The company believes the trust charter would better position it to connect traditional payment infrastructure with emerging technologies, including stablecoins, as it continues to expand its global payments network. sport for choice with a variety of payments nerds on the show today. But I mean, Matthew, maybe I'll start with you. Wise has built a global payments network without being a bank in the US. Kind of what was the driver, do you think, for this move for a bank charter?
Yeah, I think it's super interesting time in the United States. A couple of things that stand out about our market is we have so many depository institutions, almost 10,000 of them, whereas many other countries have very few. But for the last, 10 plus years, the kind of door has been closed for folks to create net new chartered financial institutions. And over the last year or so, the door has been opened wide. And we're seeing so many new charters, both kind of totally de novo companies, as well as existing fintechs, starting a banking charter to bring services in-house, vertically integrate and save money. I think that's where Wise has to be going. I cannot believe they got rejected. Usually you withdraw your application because you've been warned that you're going to be rejected. It's really astounding. I don't particularly buy the we just wanted to change our plans. I don't think you end up in this spot with a rejection if you want to change your plans. And reading the letter, it's relatively damning that, Wise is a money transfer solution and they have serious AML and BSA problems. And that's the big red flag. And while the current administration in the US is very friendly to people trying new things and doing crypto and whatever, they really still don't like, financing of global terror groups, and especially ones that, are on their hot lists, right? So Wise has been in trouble with seeing funds, allegedly sent to, Palestinian organizations, which the current administration is very unfriendly to. So I think they're trying to save face. There is new regulation, that is true. And the Genius Act has created a different approach to these charters for national trust companies that I could see how that's a better fit, but I don't really buy the underlying argument that this is of their choosing. If it had been, they would have withdrawn their application, and I'm not sure it really gives them an infrastructure advantage separate from any other type of charter.
Okay. Yeah, no, absolutely interesting take. Neira, what did you make of the story when you heard it?
Well, it was really unsurprising because it's a very different regulatory environment in the States. If you recall, Wise as TransferWise back in 2018, before they rebranded, were actually the first fintech in the UK to gain access to the faster payment system. Now, different regulations in the US don't allow you to do that, other than through a sponsor, but they've been there having access to FPS directly, not relying on sponsor banks. So for them, the UK is not particularly interesting to get a banking license, but it is in the US. So what I make of it, it's exactly what exactly is happening is that there is a direction of travel and a signaling from the regulators. So, and essentially, the old model that fintechs could innovate and grow very fast and break things and professionalize later, so to speak, that was acceptable back then because it was new. But now the regulator is saying, hang on a pickling second, later is actually too late if you want banking privileges. So that means that fintechs essentially now need some sort of bank-grade governance, risk discipline, as Matthew was mentioning just earlier on, and the kind of operating maturity that you need before you actually get the keys, not after you've actually left the car park, which was what was happening before. So the more interesting point about all of this, of course, is that it's not just about ticking boxes. It's about whether the firm has the institutional muscle memory to manage edge cases, failures, escalations, and oversight in a way that will look credible to a regulator. And that's a much higher bar than simply having a great and tidy product and a really good growth story. Because let's not forget, regulations in financial services and in the banking sector in general have been around for a very long time. And they've been around specifically for incumbent financial services institution. So if you look at the banking industry, which has been around for 100 of years, what kind of growth do we kind of expect for a bank in general? Kind of about 6 to 7% roughly year on year. And that's kind of traditional growth for banks. So regulation can cope with 6 to 7% because that's not massive growth. When you look at the likes of Nubank and others, and indeed all those fintechs that are growing at incredible rates, regulations are actually not capable of coping with that yet, which is why the regulators are becoming more stringent.
Yeah. Okay. No, I can see that for sure. And Bruno, obviously keen to get your take as well before we kind of dig into some of the additional details around this. But yeah, what was your take on this story?
Well, I believe that the case for the denial of OCC was basically related to some kind of AML, historical, issues that we saw that Wise was involved, and that sometimes that also translates into some type of message for the whole market. And there are so many players now, fintechs trying to move and become banks. But in this case specifically, I think that there was like a specific answer from the OCC and this whole AML problem that we saw that Wise was involved was something that in some sense was important for this decision. But they're going to refile it again, and let's see how it's going to unfold.
Yeah. I mean, Matthew, how big a setback do you think this is for Wise? I mean, obviously they have been, in terms of like their day-to-day operations, right, they haven't needed this charter to operate to date. They've got their kind of money transmitter licenses across 48 states, I believe. So is this just a bump in the road, or do you see this as a more significant setback?
I think it's a bump in the road. I think they're going to have to make some changes to their programs. And as was also mentioned in the OCC letter, the OCC was unimpressed with the board of directors and the oversight experience, and changing charter types doesn't solve that problem. So they're going to have to make some personnel changes. But as you said, Kate, like, you don't need to be a bank to do all this stuff in the United States. That's the way we've all done it for 15, 20 years, is working with sponsor banks. And there's actually a very good argument that you are better off not as the bank itself. And I think it's interesting seeing kind of all the fintech companies rushing the gates to become banks. There are some margin advantages potentially, but there's a big, as Neira put it, like that kind of, that collision between the regulatory framework and the tech companies, and the sponsor banks can do a very good job there. So I think they can continue doing what they're doing today. They can probably do any new products they wanted without it. They're probably giving up some margin or what they believe is some control, but I don't universally advise people that they should go get a bank charter. It's often a bad choice if you're a tech company, and it's better to work with a banking partner or multiple. A lot of fintech companies work with one for wires and one for ACHs and one for deposit accounts and one for credit cards. And each of those banks has a specialization, and that's a thing that a tech company can do. So I think they'll be okay. It's a bit embarrassing, the whole thing, in my opinion, to get rejected, and to be the one application that got formally rejected in the last 18 months is a bit rough, but they'll make it out.
Yeah. And they're obviously Wise have now said that they're planning to structure their new application around the Genius Act. Obviously, that in theory gives them more options around how that might interrelate with stable coins, how traditional networks might interrelate and might be interoperable with other payment networks as well. Do you kind of see that as potentially a game changer for Wise? Are they going to be able to start to offer new things in the payment space if they can get this license in alignment with Genius Act, or is it not so much a big deal?
Well, I tend to agree with Matthew. It's kind of not so much a big deal. And what's happened here, it's two things. One is obviously the regulators are raising the bar for any kind of fintech that wants to apply for a bank charter, no matter how big their badge is and their recognition in the industry. But it's also symptomatic of Wise's own story, as both Bruno and Matthew actually pointed out. I mean, they have their own supervisory baggage. So the bar's definitely risen for me. So if you are now, what's changed? If you are now applying for banking powers, be it a banking charter in the US or whatever else in other geography, you're not just being judged on your ambition to become a bank. You're actually being judged on whether you already behave like a serious institution. And that's what you're looking at now. So this essentially for organizations like WISE changes the strategic calculus, so to speak. A banking charter is no longer a badge of maturity you get after growth. It is a test of whether growth has been matched by control, resilience, and governance. So essentially what we're saying here, the regulator is asking, have you built a bank or just a bank-shaped company? That's what they're asking.
Yeah, no, I can see it's a critical question. And I suppose just to close this story out, Matthew, you've seen cross-border payments improve in many ways over the last decade, but I'm keen to get your perspective, maybe just to close this out on where do you still think the biggest frictions are today? What types of problems would you like someone like WISE to really be focused on trying to solve?
Yeah, I think that there's a couple interesting cases. We've solved a lot of, I want to send money from myself to this particular person. I think there's a lot of opportunity still in B2B cross-border payments, many of which are still running over Swift, and there's a lot of account numbers. And the idea of you seeing folks, other providers be able to spin up accounts very rapidly in different geographies so you can do local receiving, right? I think that's a very interesting play, is also the kind of like, I can have an account in multiple geographies so that the person I'm interacting with, it's kind of native to them. And then whether it happens over a Swift or stable coins or whatever, like nobody cares, right? Like I think cross-border is one of those things where the sender and the recipient just want it to be easy and local and native, and they want someone else to deal with it in the middle. And we still have a long way to go. WISE is big, others are big, but Western Union and MoneyGram are still bigger, I think, and that's what a lot of people are using. And so that's the opportunity still to shift people into the modern version.
Okay, well, it's almost as if you've read the show notes, but that is a perfect segue onto our next story. And that is also covered in multiple places, but that is Western Union to discontinue its Western Union digital bank service. Western Union has announced it will discontinue its Western Union digital bank service, closing all customer accounts. The company says the decision follows a regular review of its products and services and does not affect its core money transfer business, which will continue to operate as normal. The digital bank offered customers an app-based current account with an IBAN and debit card separate from Western Union's remittance business. Customers have been instructed to withdraw or transfer their remaining balances, update any salary payments, direct debits, or subscriptions linked to their account, and download any account statements before their account is closed. Neira, obviously, this is a globally recognized brand, millions of customers. What does this decision tell us about how hard it is to be a successful digital bank?
Well, it tells us one very clear thing, and that is brand recognition is not the same thing as product market fit, which is essentially what we're looking at here. A digital bank isn't automatically a sensible extension of a remittance franchise, which is what Western Union is. So even if we've got a very big logo like Western Union and it's on the app and the customer base is large. So in some cases, not specifically talking about Western Union, the adjacency of the product is actually real. In others, it's just, for lack of a better term, organizational optimism with a PowerPoint deck. So if we look at it this way, for Western Union, this is actually portfolio pruning. It's not a U-turn. There have been already signaling a broader digital and strategic reset for some time. They've been going through that, including their sort of beyond and evolve positioning. So closing the digital bank, for me, suggests it's cutting an adjacent proposition that didn't create enough standalone value. So Western Union is also a useful reminder that the hardest part is not the launch of a product such as a digital bank, it's adoption. So it's relatively easy to build a digital bank wrapper around what you already have, especially if you have a strong brand. You kind of got, off the starting blocks a bit quicker. It's actually much harder to make that wrapper genuinely sticky when the core value proposition still sits somewhere else, in the case of Western Union. So a digital bank that does not deepen engagement for their core business or indeed change behaviors can become a very expensive badge. So I completely understand why they did this.
Yeah. Bruno, what's your take on why this hasn't worked out for Western Union?
Well, that's a normal shift. I always saw other players trying to be more specialized on their core. One thing I think that I believe that is going to be seen more often in the market is basically some of the companies, like the case of Western Union, becoming providers of some type of banking as a service solution for the market based on their specialization. So we see the case for Wise. They have the Wise platform. So and just for the record, the Wise platform was the one habilitating Nubank international remittances capabilities in Brazil. So I believe that this expansion on trying to become a digital bank and have other capabilities is hard to scale. It's hard to drive adoption, especially because you're very well recognized for having this particular product. And in some cases, we're gonna see some companies taking a step back and trying to focus on their core again. But there are some other ways for them to still be a relevant player. They are already a very recognized brand in the sector. It's about how to productify that and maybe enable that in other ecosystems of other players, like some other competitors are doing right now.
Yeah. And Matthew, you alluded to Western Union, I suppose, at the tail end of our previous story as competitor to Wise, also being another player in the space for Wise. I mean, is this a sign of Western Union in decline, or is it, as maybe Neira's implying, just a sensible pivot? What do you think?
Yeah, it's not the first time Western Union has tried kind of cash management accounts. They had a prepaid card product here in the States many, many years ago that I think didn't really survive. I think it's as Neira kind of pointed out, it's a natural thing that people think in strategy meetings, we should expand and wrap more around. But I think these companies need to ask what's our right to win this space, and how do we differentiate in this space versus our core offering? Western Union does something very specific, and they do it pretty well, and they've served the world for a very long time, and they move a lot of money, and that's a very different problem than I want to deposit my money with you, right? Those are I think very different relationships when people think about them. And I imagine they will try something new. They're a big company. They need to think about their growth. I don't think it's they're never going to try deposit accounts again. Maybe they'll try a credit card. Who knows, right? They'll try something. They want to build those relationships with their users and protect their franchise. But I think it's very hard to the other point Neira made about branding. The power of a strong brand is people think of it in a certain way. It's great to have a brand everyone recognizes, but when people hear Western Union, they think money transfer, then they're not going to think something else. And that is how a brand can both be an asset and detrimental to future growth.
Yeah, no, for sure. I mean, one of the things they have announced this year is that they're launching a stable coin, I think USDPT, on the Solana blockchain. So again, what's your take on that, Matthew? Do you think, it's an interesting move, right? Because the rise of remittances via stablecoins, from certainly my limited understanding, is probably one of the biggest threats to the likes of Western Union in some parts of the world. So yeah, are they kind of trying to become their own competitor? It's interesting to see kind of what the cannibalization is going to be.
I think you should. I'm a big fan of the innovator's dilemma, in the standpoint of companies that survive are companies that are paranoid and that look at their competitors and don't say, wow, those guys are small. They say, how are they doing this better or faster or more efficiently than I am? And what can I learn from that? I don't know that everyone needs their own stable coin. But if having their own stablecoin lets if having their own stablecoin allows Western Union to move money more efficiently, either get better margins or provide lower costs or turn the transfers around, then that's again what matters. I don't think that people sending money care how it gets there. They care that it does get there and that they pay a fair price.
And besides that, they are already recognized as someone that helps moving money around the globe. It's just a matter of the technology that you're going to do that. It's not the case. It's just like trying to reinforce and be competitive comparing to other other players that we still have in the market right now. So it's a different type of jungle that we have from when they are dominant, used to be dominant in this sector.
Yeah, I mean it's such a fascinating space. It's absolutely not one that I would claim to have any expertise in at all. In fact, I think one of my most humbling experiences as a researcher before I even joined 11FS many moons ago, when I was trying to write a quantitative survey to ask people ways in which they moved money internationally. And I think the other open text box had an astronomically high percentage of selections. And when you looked at kind of the written comments of all the different ways and means that people were using, I think this was looking at specific corridors in Europe, say between Greece and Romania or things like that. So, but yeah, then the sheer volume of channels and ways and means in which people were moving money from one place to another just really, really humbled me, blew my mind, and made me need to realize, I need to work harder as a researcher to understand some of these spaces. I think one of the ones which stood out, what I found most interesting was, I think on multiple instances where people were cited that they were providing cash to bus drivers that were driving bus routes really, really consistently. So, you could just go and give a bus driver your money and they would physically drive it to the town where your family members live. So obviously we've moved on a lot from, that was a long time ago. So as you said at the beginning about not aging yourself, I'm probably aging myself now. But things have changed in many ways. But Neira, do you think some of these physical channels, these physical touch points still matter in this space? Obviously that's one way in which the Western Union has stood out to people in the past, is known for its physical touch points. Do you think they are going to lose those as part of this new version of Western Union, or does that still need to be part of the strategy?
No, I don't think so, because when you look at what Western have been doing and have been very successful at, is building a whole sort of ecosystem with cash outlets, of course, and overlaying all sorts of products on top of that. So cash is absolutely still essential in some markets. I mean, you said yourself, in some corridors, remittance is still done manually by a bus driver. I hadn't heard that one before. So essentially, especially where the income is informal, where banking penetration is uneven, or indeed trust in digital rails is still developing. So cash still very relevant in those markets. But I think perhaps the most important point is that cash is becoming context specific rather than universal. In some corridors, it's still core infrastructure. In others, it's kind of a fallback. So what that means for organizations like Western Union is physical networks are not irrelevant at all, but they are no longer the only story. The strategic challenge for companies such as Western Union is to serve both worlds without letting the legacy network define the future model, hence applying for bank charters and whatever else they're trying to do. So this is a very hard balance, really, and not every company gets it right, admittedly. So the strategic opportunity for digital adoption around all of that core infrastructure is still there, just not in the digital bank wrapper. And indeed, they've realized that very, very soon. So the interesting play is not basically become a bank, but use digital tools to strengthen remittances, as Bruno just said, customer retention, and of course, corridor economics because it is specific to the context. So if they can redirect their energy into higher conviction digital assets, perhaps partnerships, rails, or product layers that sit closer to their core infrastructure, this could actually improve their focus rather than shrink their ambition.
Okay, well, we'll have to wait and see how it pans out for them. But on that note, we're just going to take a quick pause here. We'll be back very shortly.
This episode is brought to you by Netflix. The MLB at Field of Dreams returns. Bryce Harper and the Philadelphia Phillies face Byron Buxton and the Minnesota Twins at the iconic Field of Dreams ballpark. The field is calling. Watch the MLB at Field of Dreams game live on Netflix Thursday, August 13th at 7:30 p.m. Eastern, 4:30 p.m. Pacific.
This episode is brought to you by Orgain. Orgain creatine monohydrate helps improve muscle size, strength, and power when combined with a regular exercise and weight training routine. It supports brain health, and it's certified with informed choice, so you can compete with confidence. Studies show that creatine may support brain health in vegetarians and aging individuals. These statements have not been evaluated by the Food and Drug Administration. This product is not intended to diagnose, treat, cure, or prevent any disease.
Before we get back to the news, we wanted to tell you about our latest Insights show. This week, Ross Gallagher is joined by Maya Bittner from X Factor Ventures, Ireland Novitzer from Formance, and Matthew Ford from Sidekick. They discuss neobank expansions, how they're beginning to push into the private banking space, and what that might mean for the future of the industry. If you haven't listened yet, the episode is out now. Just scroll down in your feed. It's the one right below this episode. Okay, back to the news. And our final main story this week is eBanks and PagLeve blend Pix and buy now, pay later to expand access to installment plans in Brazil. eBanks has partnered with Brazilian fintech PagLeve to launch Pix 4X, a new buy now, pay later product built on Brazil's instant payment system, Pix. The service allows consumers to split purchases into 4 fortnightly installments at checkout, even if they don't have a credit card. PagLeve's AI-powered risk engine performs an instant credit assessment in under 3 seconds, whilst eBanks makes the product available to more than 500 merchants across sectors, including retail, gaming, and education. The companies say the service is designed to expand access to installment payments for millions of Brazilians who use Pix, but don't have access to traditional credit. Bruno, I suspect it probably makes most sense to come to you first on this one. How big an announcement is this?
Well, I think that's a great announcement, but this type of solutions like buy now pay later solutions sitting on top of Pix infrastructure, they are quite common in Brazil. Some banks are already providing that as well. But for this case, we see because eBanks is a major player when they're bridging the gap on global e-commerce platforms and things like that. So they are habilitating and making it easier for Brazilians to buy products from players outside Brazil. And now with the convenience of paying with Pix, which they already offered, but now also with the installment payments. So that's a cool one, and it's great to see how Pix became a big platform for all those players to create innovations on top of it. Besides, Pix already has its own roadmap for evolution and some other solutions. It's also in its roadmap. It also connects to the Open Finance roadmap with payments initiation, recurring payments and things like that. And this whole, using the rail specifically and coupling credit to have a contextual offering in different, digitally, that's a very cool case.
Yeah. And I'm interested, again, constantly learning more about Pix and just generally blows my mind in many ways, like in terms of the scale of what it's achieved. But in terms of the stated ambition here, to open up credit for Brazilians who use Pix but don't currently have access to traditional credit, and sort of what you're saying in terms of the main focus for this being on global merchants, people like outside of Brazil. Do you think is that kind of unlocking quite a big opportunity for people maybe that have wanted to be able to transact outside Brazil, but haven't had the use case, haven't had the opportunity to do so. Like, is there kind of, I suppose to Neira's point earlier, is there kind of product market fit here? Do you think there's an audience of people in Brazil that have wanted to access these merchants, but have so far just not had access to them? Or are e-banks getting a bit overexcited about maybe something?
Yeah, it's a variation of something that other players already provide. But the thing here with this announcement is because eBanks is a provider that is always bridging the gap between Brazilians and other and different global platforms. So they are already specialized on that. So that's one take. But Brazilians, when you look at Brazil, the access to credit cards grew a lot over the years. I think we have the opportunity to do installment payments via credit card since the 90s in Brazil, because you used to have like the post-dated checks, and that was part of our culture, and that was incorporated by the credit card industry locally. And now it's incorporated through this whole buy now, pay later movement, and also with the help of Pix. But this announcement specifically is because eBanks is a player that also connects global e-commerces, and that's a good thing. But the behavior of Brazilians doing and buying through buy now, pay later is something that it's widespread in our culture, and it's cool to see how it translates into different payment methods in the country.
Yeah, no, absolutely. Matthew, another thing they've got very excited about in the press release for this one was obviously about the use of AI within the risk and underwriting process. 3 seconds sounds pretty speedy to me, but how impressed were you by some of these claims or not?
I don't know. I always like to make the joke that AI is also known as machine learning and has been around for a very long time. Obviously, large language models are new and do different things, but underwriting has used complex algorithmic tooling for a very long time, and it's very powerful, and it's often been very fast. So I don't know, I'm super impressed. I think AI can be great for underwriters. I use it to examine possibilities of ways to change the model and explore new capabilities. The other challenge with AI underwriting is the black box it can create. You don't know what's going on inside of it sometimes, and depending on where you are, that can violate regulations, but also can create like unknown future outcomes because you don't really know what the machine is doing. I think speedy underwriting is great. I think using lots of data is great. I think we've all been doing that actually for a very long time. So maybe kind of along with Bruno's, like, this is maybe not as innovative as it seems. If you're not using AI or machine learning or an algorithm for underwriting, like, you are probably doing it wrong as opposed to that being net new.
Yeah. If you're not using AI for underwriting, see me after class. Kind of the vibe.
Exactly.
Yeah.
On point.
Yeah, exactly.
On point.
Fair enough. Neira, again, come to you. What was your take on the story? Is there anything about this that was interesting to you in particular?
So I'm totally with Bruno and Matthew on this one. If we look at what's happening here, and as Bruno said, in Brazil, people have been used to doing credit on credit cards and everything else is kind of common in the country. What's new about the story? It's not AI, and it's not AI underwriting. So, and it's more about financial inclusion. So therefore, when we talk about AI, I wouldn't say AI underwriting is actually the driver or it's an inclusion story in itself, because it's not. The inclusion story in this is actually really cash flow underwriting. So, and it's only as good as the data. Because the model is only as good as the data that it can see. So because we're using bank rates, Pix particularly, so I would say Pix is the star of the story rather than AI. So if you're using bank data to give you the fuller picture on income, outgoings, affordability, then you can potentially, with the help of AI, serve individuals with a thin file or that are credit invisible to the traditional industry in general, much better than with legacy bureau data, such as the FICO scores we kind of used to. Not everybody can have a credit card. They need to be underwritten, so to speak, before they can get one. So yes, absolutely, AI can help. But it's not the hero of the story on its own. It's the engine. The data layer is actually what determines whether you're actually reading someone's financial reality, because that's what we're talking about here, rather than just their historical relationship with debt. So in that sense, this is more about cash flow underwriting than AR underwriting as a standalone inclusion tool. But I believe this could promote financial inclusion. Bruno, feel free to disagree with me. I think this is good news.
No, I was just going to say that as an open finance advocate, I also think that part of using, as the data is one of the most important things for the model and for the AI tooling to operate here. I believe that also talking about the financial infrastructure in Brazil, we have PIX and also have the data from open finance that helps in this credit assessment and the product to be delivered and the credit to be contextualized in the purchase. So that's my take here as an open finance advocate.
Yeah. And again, I'm keen to understand, Bruno. I mean, obviously in the UK, buy now, pay later is moving into a more formal regulatory framework. Again, what's the state of play with buy now, pay later in Brazil? How is it regulated or not as things currently stand?
Well, in fact, we don't have that many concerns on that because it's an instrument that Brazilians use a lot for a long time, since the 90s, as I said. But one thing is concerning, which is the fact that we have some platforms like food delivery platforms and things like that, and now they are enabling people to buy on installments like a hamburger. So when that happens, that sounds an alarm on the economy. So that's one take that perhaps something going to be done about that, because when you're talking about some larger purchases or things like that, but when you're like dividing into 3 installments to buy a pizza or a hamburger, there's something here that's related to perhaps with the economy first, but also with regulation, perhaps.
Yeah, no, absolutely. I mean, I guess we've seen a huge part of the benefit of fintech and sort of the changes we've seen in financial services about opening up products, making products more accessible, easier to use. But again, I think there is a very interesting challenge when, as you say, product usage which is quite established, but only in sort of within a certain environment and a certain context. If that suddenly then becomes available in different platforms, different contexts, but customers are still treating it in the same way, again, is the system fit for purpose, or do there need to be adjustments? It's definitely an interesting space. And obviously, again, just to come back to you again, Bruno, again, this is your stomping ground. We've seen Brazil often be sort of an innovator, one of the ones leading the way when it comes to payments innovation. Do you think we'll see other markets follow a similar line, sort of trying to build sort of integrated payments and buy now, pay later networks?
Yeah, for sure. When I look at other countries, especially emerging countries in Latin America, so we have the case for Colombia. There are some other neighbor countries that are looking at the opportunity of constructing some type of digital public infrastructure for payments. And I believe that one discussion, and other countries, even in Africa, are also looking at this possibility. And I think that something that we're going to start discussing from now on is just like payments sovereignty, so as so to speak, because I believe that it's becoming important as just like having your own resources and just like other resources that you have. It's like you have some type of sovereignty on payments, either through digital public infrastructure or other ways. So, and Brazil and other countries in Latin America are looking at that. And Brazil, I also think that it's doing a good job on evangelizing other countries on open finance and PIX, some of the different regulatory sandbox, which is something that we learned from the UK as well, and the world learned from the UK. But there's lots of possibilities for Colombia, Peru, talking about the neighbor countries, and other countries in Africa as well.
Yeah, absolutely. Watch this space. Okay, we're just going to take another very quick pause. We'll be back shortly.
Hey parents, how do you make smarter choices for your kids' college today? That's where Sally can help. With Sally, you can find scholarships, funding options, tools, and guidance all in one place. And if you need a loan, Sally has options for different families and different situations. College is only worth it if you do it right. So don't just help your kid go. Help them go smarter. Sally.com/GoParents.
Okay, now for a quick look at stories we don't have time to cover in full. Samsung launches its first credit card. Samsung has launched its first ever credit card in the US, partnering with Barclays US Consumer Bank and Visa. The Samsung Galaxy Card is available as both a virtual card and a premium metal physical card, which offers 5% cashback on eligible Samsung purchases, 3% on purchases made through Samsung Wallet, 2% on selected streaming services. Customers can also earn a $200 welcome bonus after spending $2,000 within the first 90 days. The card is fully integrated into Samsung Wallet, allowing users to manage it alongside payment cards, IDs, passes, and digital keys. For many reasons, I really am not the right person to be commenting on this, but primarily because I have a long-held and entirely irrational dislike of Samsung from a very early part of my career when I was doing some research on one of their competitors. But I'm going to try and put that to one side when thinking about this. I think this is an interesting one. Is it really about the card, or is this just a tactic to try to drive up usage of the Samsung Wallet? I think when I've looked for it, precise user stats are fairly hard to come by, but it certainly seems like it's been struggling to gain traction in the wallet space, versus Apple, versus Google. So it feels like they've gone in fairly heavy with the benefits here. There's no annual fee, and they're sort of timing this kind of cashback around Samsung purchases around the same time as they're about to launch all their next flagship products, etc. So I guess if you're not like me and you do love Samsung, then maybe you might be tempted to kind of give this a go if you were planning to buy a device anyway. Again, from when I've done research in the US, I never fail to be amazed by how many credit cards many people seem happy to have in their wallets, for the better or for worse. So yes, I guess we'll just have to see how this one pans out. Okay, on to our and finally story. So this one is taken from the BBC. Would you take £50,000 or risk it all for £1 million? A YouGov survey has sparked debate after asking more than 4,600 UK adults a simple question. Would you take a guaranteed £50,000 or flip a coin for a 50-50 chance of winning £1 million? Nearly 3/4, 73%, chose the guaranteed £50,000, while just 21% opted to take the gamble. The survey also revealed notable differences by age and gender, with younger people more willing to take the risk than older generations, and men more likely than women to go for the £1 million. Okay, we've got to start with the obvious question first. Matthew, what are you doing? Are you taking the 50,000? Are you flipping the coin? What are you doing here?
I think mathematically you're supposed to flip the coin because there's a net expected value, although probability was always my worst subject in mathematics. I think this has so much to do with both your kind of psychographic, right? If you're the gambling type already, like you're going to gamble, or your current economic situation. If $50,000 is going to change your life, you're going to take $50,000. Like $1 million probably changes most people's lives. Not, the billionaire class. But if you're comfortable and you aren't crushed by debt, it's easier to take the gamble than, take the $50,000. If you're living paycheck to paycheck, that $50,000 can change your life. And I always think that's an important factor, which is like life-changing money is a different amount to every person. And I think that would drive a lot of the decisions here. But I would flip the coin because it'd be much more exciting to get $1 million or £1 million. Even better, £1 million is worth more than $1 million. So,
this is apologies. This is a very UK-centric currency story. Again, like for avoidance of any doubt whatsoever, nobody is actually getting £50,000. I don't believe that's within the marketing budget of Fintech Insider. But again, there are a few had to choose between these two, which I'm so sorry.
So for me, I'm actually on Matthew's side. I would actually flip the coin. But as your data suggests, this is really a question about life stage, not just risk appetite. So most people are actually not risk averse in the abstract. They are risk sensitive when the downside feels personal and immediate. So risk tolerance, when you look at people, is just optimism with a balance sheet attached. Because, the older you get, as Matthew said, and you have, someone that you can afford to gamble with, and you're going to flip the coin because 50 grand is really not that much to you. To some other people, it's a life-changing amount of money.
Yeah. I guess the other prompt question I've got here, but I wonder if I worry this is a bit too personally revealing. I don't know. If the guaranteed amount was 100,000 or 250,000 pounds, when does it become impossible to turn down? What's your tipping point? Bruno, at first I was supposed to ask you, are you taking the 50,000 or are you flipping the coin?
I would flip the coin, but if it was,
I feel so dull now. I'm definitely taking the 50.
But it depends on the background.
Exactly.
I know what type of risk I can take, but if it would be like 250, perhaps I would take the cash. It's just like a matter of perception. But for 50, if you consider 50 and 1 million payoff, I would flip. But if it changed a little bit, it changed my perception.
I'm thinking I've literally just received the invoice today for the next month of my daughter's nursery fees. And that's that's probably put me in the mode of just take any money you can get because it's bloody expensive. Anyhow, I probably shouldn't be using this podcast to just rant about the cost of childcare in the UK. Obviously, as we cited, this is in UK currency, UK consumers. Matthew, if this had been asked in the US, do you think we would have seen a different outcome?
I don't think so. I think of the UK and the US having similar gambling cultures. Maybe that's wrong, and I think it's certainly growing here. But my
understanding is the US has a much better investment culture, though. As in, the number of retail investors in the US, I understand, is sort of higher than in the UK. So I don't know.
Yeah, I don't know. I approach this from the do people make a lot of bets on sports and other things, and it's growing dramatically here. If anything, I would say there'd be more coin flippers here probably. One thing we've been talking a lot about here is a new credit card that's supposed to launch that every time you swipe, you don't know what rewards you're going to get because it's algorithmically kind of decided. Polymarket and Kalshi are everywhere, advertising on everything. There's never been more gambling here. So I feel especially for younger folks who maybe feel their lifelong outcomes are less certain and they don't know how they're going to kind of achieve their goals of maybe owning a home or having a family, then gambling feels like a better path, which is not a very good thing to say. And I am not pro gambling in the least myself, but I feel like there would be a lot of people who would take that risk. And I was thinking about, we had that old game show, Who Wants to Be a Millionaire, and you would open the briefcases. There was not really much skill involved, and people would make very mathematically inane decisions about moving on because they had so much money. And I think that's a detailed version of this question. And so I think people want the big prize. That's why they play the lottery, even then their chances are 1 in 600 billion or whatever that they're going to win. But maybe it'll be them and they'll be a billionaire, and that's very exciting.
I hope so. Let's put our boring hats on just for a second, just to round things out. And so, say we have all taken this imaginary £50,000 that you're absolutely not being given. What would you be spending it on, Neira, if you got £50,000?
I'd probably invest in. I'd invest it immediately. Put it in an investment pot. Forget about it. This is not money. This is not money I was counting on. Just forget about it. Put it somewhere else.
Very sensible. Bruno, what about you? What are you spending £50,000 on?
Yeah, I would invest as well. I think that's the case. And just for the record, if something happened in Brazil, I also see here the gambling problem as an endemic problem. It's a big problem in the country, but the people here are so indebted. The situation is complicated. I think that many folks would take the money because to solve their current problems than trying to gamble it. But anyways.
No, I think that's fair. Matthew, what's your imaginary £50,000 going on?
Well, my kids are older than yours, it sounds like, Kate, but I would probably set it aside for school tuition. That's what it would, or pay whatever tuition bill is next.
I'm going to be slightly more irresponsible. I'm going to say half of it can do something sensible like going into investments and savings, but half of it I'm going on a big holiday. That's I feel like, that's how you've got to live. Half holiday, half sensible.
I do always encourage people, I work with a lot of startups and people have exits and they make money. And I say, the first thing you should do is just say $5,000. Just like go spend $5,000 on dumb, like if you made $1 million, go spend $5,000 on dumb stuff. Get it out of your system so that you don't spend $500,000 on dumb stuff. Like don't go buy a Ferrari, just buy that, that cool computer or that cool lamp or whatever nonsense you've been, keeping after. Get out of your system. So I think it's a smart move, Kate.
Okay. Well, yeah, sadly, I don't have a multi-million-pound exit coming up on my horizon anytime soon. But if we have any founders listening who do, then that's very sensible advice. Okay, that sadly wraps up our show for today. Thank you so much to today's guests. Where can people find out a bit more about you and your companies, Matthew?
Yeah, my company is Totavi.com, Totavi. And I also write the Cards for the Win newsletter, which is at cardsftw.com.
Awesome. Neira?
Find me on LinkedIn and on Blue Sky.
Awesome. Bruno?
LinkedIn, I think, is the best source. So Bruno Diniz at LinkedIn is easy to find me there.
Brilliant. And as for me, you can also find me on LinkedIn, Kate Moody, or you can drop me an email, kate@learnfirst.com. That wraps up today's episode. Thank you so much for listening to today's show. If you like what you heard, please make sure to follow us on your favourite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider or email podcasts at 11FS.com. Thanks again. Goodbye.